All right, hello everyone. Thanks for checking in. Today was an ugly day in the market, and I suspect we're going to see some follow through. My name is Mark. I am the stock market jobber, um, and my mission is to teach people like yourselves about how trading really works and how Wall Street really works. Now, I'm someone who's qualified to do this because I spent half my life, or 20, 25 years, in the institutional trading world. I was the head of trading at three different money managers where I oversaw billions of dollars, all kinds of strategies. Yes, hedge funds too. I know you retail investors are fascinated with hedge funds, but if you check out the market lessons page, you will see that, or you'll check out our lesson, and I explain really what hedge funds are. And believe it, they're not as exciting as you think they are. And also, if you look at my recent uh, pieces of research on SPY, you'll notice that there is a bear on a lot of them. So that's why this move here was not surprising. And I expect some followers. So let me show you why. So here's the S&P 500. Here's where we start off. Yeah, I thought we would find a little bit of support at 400 because it's a nice symbolic level, nice round number. People like nice round numbers. But, this is right where we closed, 399.33. So we're right within a point of it. I think we're going to go lower. We're going to have to reevaluate. But my short-term price target is 390. My longer-term price target is 320. And that's because if we get to 320, we'll be fairly valued compared to history, the last 50 or 100 years. Also, the average bear market goes down 35%. And since World War II ended, there's been I think 25 bear markets, and the average decreases 35%. So if we take the top where we peaked in late 21, and we go down 35%, that brings us right down to around 320. Anyway, let me show you this. So now the S&P is the sum of its parts, okay? It's called the S&P 500 because there's 500 stocks in it. But there's on a higher, what's the right word? Threshold, or not threshold, but on a higher, thing, whatever. We'll just call it a thing for now. There's 11 sectors. So there's 11 sectors, and within the sectors, there's industries, and within the industries, there's sub industries, and within the sub industries, there's stocks. But one of the things we do as stock market jobbers is we look at the different sectors. And this is why we're not at all surprised that the market went lower today. Let me show you why. Now, here's our technology sector. Notice how, since the beginning of February, it found support around this important level here. Today, it broke it. All right. Support is a large collection of buyers. Now, why is there a large collection of buyers gathered around this level? Well, it's because it was a resistance level. Levels that were resistance can turn into support. In the institutional trading world, we worry about what are the price levels, what's the momentum, what's the trend. We don't waste our time with silly things like, you know, uh, GAN theory, Elliott waves, Fibonacci. And it kind of upsets me when I see people looking at that because, or I see places that charge money for people to learn about that stuff. Because maybe it's interesting to talk about it, but I don't know anyone who's made money off of it. So why would a level that was resistance become support? Well, it's because of seller's remorse. There are people who sold who felt good when the market went down, but when we got back above that, a lot of these sellers become remorseful and they say, I shouldn't have sold. I made a mistake. I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. So we have remorseful sellers placing buy orders at the level they sold at. And if there's enough of these remorseful sellers placing buy orders, or if there's enough of these buy orders, I should say, the level that was resistance can turn into support. So resistance here, support here. This is the biggest sector in the market, and we broke important support. When we break support, it's not just symbolic. It tells us that the investors who created the support with their buy orders have left the market. They've either finished their orders or they maybe cancel them, but regardless, they're out of the way. And anytime you take demand or buyers out of a market, it could set the stage for a move lower. And that's what happened. The second biggest sector in the market is healthcare, and this thing is just in a nasty downtrend. We can see that there was support down here around 120, resistance. It's all about the levels. It's like just knowing where the price levels are. It's like having a map. People overthink it. It doesn't need to be as complicated as you think to make money trading. That's why you should sign up for a stock market jobber. You should at very least subscribe to our YouTube page. But on our page, which we're going to launch relatively soon, it's going to be behind a paywall, but I think it's not going to be expensive at all. At least not in my opinion. So why would a resistance become support? We got the seller's remorse, right? All right, so that looks ugly. So we have the two biggest sectors of the market, healthcare and technology, each look pretty ugly. Here's our financial sector. You can see this is rolled over. People get a lot, I could say that this is a rounded top. A lot of newer traders get too obsessed with they want to learn about technical analysis and they want to say oh, this is this pattern, this is that pattern. Memorizing the names of the patterns is not important. What's important is watching the dynamics. And when we get a rounded top, it's a reversal pattern shows a change in trend. Either the bears over the power of the bulls or the bulls over the power of the bears. Okay. When it's a slow trend change, it manifests itself on the chart as something that looks like a rounded top here. If it's a fast trend change, we get something that looks like, oh, come on, where's my pen? We get something that looks like this. We call that a V. But it's really not a big deal. Well, I don't know if that's the right word, but it's not important to memorize the names of the patterns. What's important is to see, oh, okay, the blue team was in charge, the red team took over. The blue team was in charge, the blue team is the bulls, the red team is taken over. So over the years, I've seen a lot of people debate whether this is this pattern, this is that pattern. Who the hell cares? No one's going to pay you because you said, oh, this is this pattern or this is that pattern. But the market will pay you if you understand and recognize when trends change. This is our consumer discretionary sector, and this is kind of the last thing that was holding the market up because, as you can see, it was support for the last month or so. But we can see here, resistance becomes support. Resistance became support. Now the support is breaking. So I expect the market to go lower. Let's see. I think we got one more thing to look here, or to continue to go lower. Oh, thanks everybody. That's a nice little applause there. Here's our industrial sector, and there was resistance around 102. It looks like we're not going to get through that resistance. And resistance is a large concentration of sellers. And a lot of times, if a market gets to resistance, like it did here and here and here, the sellers start to sense that, oh, gee, there's other sellers around. Man, and they start to get nervous and they say, I better reduce the price I want to sell at or I'm going to miss out. So it's a common phenomena when we get to a resistance level, if we don't get through, to get a nasty sell off. The opposite is true if we get to a support level. Support's a large collection of buyers, and if a market's trending lower and it stops going down, the buyers who created the support start to think, oh, gee, there's other buyers around. I better be more aggressive and be willing to pay higher prices, or else I'm going to miss out. So anyway, once again, I am Mark. I am the Stock Market Jobber. Please sign up for our YouTube site. Please check out our website, stockmarketjobber.com, and tell your friends. And that's it, everybody. Thank you. I will talk to you soon.